Did you know the average cost of a funeral in the United States has now climbed to over $9,000? That is a staggering amount of money for your grieving family to come up with comfortably in just a few short days. Leaving this financial burden behind is a fear that keeps many of us awake at night, but it does not have to be your reality. Most people think finding affordable coverage over the age of 50 is impossible or too expensive to manage on a fixed income. The truth is that insurance companies are fighting for your business right now, which has driven prices down significantly for qualified seniors. You simply need to know which carriers offer true value and which ones are hiding expensive secrets in the fine print. Let's be honest about the advertisements you see on daytime television offering coverage for just $1 to start. These plans often seem like a miracle solution, but they can be traps for the uninformed buyer. We need to look closely at what you are actually buying before you sign any paperwork or send a check. One of the most famous options is Globe Life, which you have likely seen, advertised heavily with that attractive introductory rate. While getting coverage without a medical exam sounds perfect, their rates for seniors often increase every 5 years as you get older. If you live a long life, that affordable policy could eventually become too expensive to keep just when you need it most. Another popular competitor is the program endorsed by AARP and underwritten by New York Life, which many seniors trust implicitly. They offer distinct advantages like easy acceptance and the backing of a massive, stable company that pays claims reliably. However, many of their term policies are designed to end at age 80, meaning you could outlive your coverage completely. Then there is Mutual of Omaha, a name that has been a staple in American households for decades. Their Living Promise Whole Life policy locks in your rate from day one, so your premium never goes up regardless of your age or health changes. While their starting price might be higher than a teaser rate, the long-term stability often saves you thousands of dollars. When you compare these side by side, the difference comes down to renting your insurance versus owning it. Renting is like the term policies that get more expensive or expire, which works if you only need coverage for a few years. Owning is a whole life or final expense policy that remains yours forever with a guaranteed payout. Let's look at the numbers for a typical 60-year-old searching for $10,000 in burial protection. With a rising rate plan, you might start paying $30 a month. But that could jump to over $60 by the time you turn 70. A locked-in whole life policy might cost $45 now, but it will still be $45 when you are 90. State Farm is another giant in the room, offering excellent customer service and a local agent you can actually shake hands with. They are a fantastic choice if you prefer personal interaction and bundling with your home or auto insurance policies. However, their underwriting can be stricter, meaning if you have minor health issues, you might face higher premiums or rejection. This is why guaranteed acceptance plans have become such a critical option for those with pre-existing conditions. Companies like Colonial Penn market these aggressively to ensure that no one is turned away due to their medical history. The trade-off is often a 2-year waiting period before the full death benefit is active, which is a crucial detail to remember. Smart shoppers understand that the lowest price today does not always equal the lowest cost over the lifetime of the policy. If you buy a policy that increases in price, you might be forced to cancel it later, losing every dollar you ever paid in premiums. That is exactly what some less reputable insurers are counting on to make their profits. You should also consider riders or add-on benefits that some competitors include for free, while others charge extra. For example, an accelerated death benefit allows you to access a portion of your funds early if you are diagnosed with a terminal illness. This money can be a lifesaver for medical bills or creating comfort in your final months. The application process itself varies wildly between these competitors and should be a factor in your decision. Some carriers like Ethos or specialized senior insurers use modern technology to give you an instant decision over the phone. Others may still require a nurse to visit your home for a blood pressure check, which can be invasive and slow. If you are in good health, avoid the guaranteed issue plans because you are paying extra for a risk you do not represent. You can qualify for simplified issue policies that ask a few health questions but reward your good health. With much lower monthly rates, this is the sweet spot for most seniors who want affordability without jumping through hoops. So how do you choose between the rising rates of Globe, the membership model of AARP, or the stability of Mutual of Omaha? The answer lies in your specific goal. Are you covering a mortgage for 10 years or a funeral that could happen 20 years from now? For funeral expenses, a permanent fixed-price policy is almost always the superior financial choice. Imagine the peace of mind you will feel knowing that check is guaranteed to arrive tax-free for your beneficiaries. It is not just about the money. It is about protecting your family's dignity during their hardest week. You are removing the stress of fundraising or borrowing money so they can focus entirely on celebrating your memory. Do not let the fear of a medical exam stop you from checking your options, as many top-tier plans now skip it entirely. Technology has improved so much that insurers can verify your background electronically without you ever seeing a needle. This makes the process faster, more private, and far less stressful than it was even 5 years ago. You have worked hard your entire life to provide for your family, and this is the final layer of that provision. There is no greater gift you can leave your spouse or children than a clean financial slate. It ensures your legacy is one of love and care, rather than a stack of unpaid bills. The market is currently soft, meaning rates are competitive, but they are subject to change as economic conditions shift. Locking in a rate at your current age is the single best way to save money, as waiting even 1 year can increase premiums. Every birthday you celebrate essentially acts as a price hike for any future life insurance policy you buy. Avoid the mistake of buying too little coverage just to save a few dollars a month. Inflation affects funeral costs, just like it affects groceries, so $10,000 today may not stretch as far in a decade. A slightly larger policy now ensures your family isn't left paying the difference later. If you are unsure where to start, looking for an independent broker who sells multiple brands is a smart move. An agent who works only for one company can only show you one menu, but a broker can compare all these competitors for you. They can spot the price traps and guide you toward the company that views your specific health profile most favorably. Remember that life insurance for seniors is not about making you rich. It is about making your family safe. It is a tool for liquidity when assets might be tied up in probate or real estate. It provides immediate cash when it is needed most, without delays or legal hurdles. Check the financial strength rating of any company you choose. Looking for a rating or better from agencies like AM Best. You want to be certain the company will be in business 20 or 30 years from now when your family files a claim. All the competitors, we mentioned Mutual of Omaha, State Farm, AARP's partners are financially strong and reliable. Be wary of policies that offer cash back after a certain number of years unless you fully understand the terms. These often come with much higher premiums that could have been better spent on a straightforward death benefit. Simple is usually better when it comes to final expense insurance. Review your beneficiaries on any old policies you might have, as life changes like divorce or passing of a spouse can make them outdated. Buying a new, small policy can also be a way to leave a specific gift to a grandchild or a favorite charity. It is a flexible financial tool that does more than just bury you. Taking action today is the only way to silence that nagging worry in the back of your mind. You do not need to commit to anything right now, but you do need to see the real numbers for yourself. Information is your best weapon against overpaying for this essential protection. We have made it easy to compare these top-rated carriers without sitting on the phone for hours. You can see quotes from the most trusted names in the industry side by side to find the winner for your budget. It takes less than 2 minutes to see how affordable peace of mind can truly be. Do not wait until a health scare forces you into a more expensive guaranteed acceptance plan. The best time to buy insurance is always when you feel you do not need it yet. Your health is your currency, and right now is likely the most purchasing power you will ever have. Click the link on your screen right now to access our free, private comparison tool for U.S. seniors. You will see instant quotes from competitors like Mutual of Omaha and others, customized exactly to your age and state. There is no obligation to buy, just the honest facts you need to make a smart decision. Your family is counting on you to make this decision, so do not leave it for another day. Secure their future, lock in your rate, and get back to enjoying your retirement with total confidence. Click now to see your options and cross this important task off your list forever.